Have you ever wondered how exchange-traded funds or ETFs work for investors? These financial tools, often simply called ETFs, are a type of investment fund and exchange-traded product traded on stock exchanges. Imagine you have a cool $5,000 to invest in the technology sector. You decide to put your money into a technology ETF that mirrors the performance of a tech index. This is your first step into the world of ETF investing. Sounds interesting, doesn't it? Well, let's delve deeper into this investment journey. So, you've decided to invest in a technology ETF. What's the first step? You start by buying shares in the ETF. Let's say you've got $5,000 to invest and you're eyeing the tech ETF. This ETF is currently priced at $100 per share. So, with your $5,000, you can buy 50 shares of this ETF. Simple, right? You're now a part owner of a diverse portfolio of tech stocks. Now that you've bought your shares, let's see what's next. What's inside your ETF and how does it react to market changes? Let's take a closer look. Your chosen ETF, the tech ETF, holds an array of tech stocks from industry giants like Apple and Microsoft to emerging players. This variety isn't just for show, it's your ticket to the magic of diversification. By investing your $5,000 in this ETF, you're not just buying shares in one company. You're gaining indirect ownership of a broad spectrum of tech stocks, spreading your risk across the sector. But what happens when the market fluctuates? If the tech sector thrives, the value of your tech ETF shares is likely to increase. On the flip side, if the sector hits a rough patch, the value may decrease. That's the nature of market fluctuations. So, you're not only investing in one company but in a whole sector. But how does this flexibility impact your trading? What are the advantages of investing in an ETF? Well, let's take a closer look. The first major advantage of ETFs is their liquidity. Throughout the trading day, you can buy or sell ETF shares on the stock exchange at market prices. This means that if you need to cash out your investment, you can do so with relative ease. Secondly, ETFs are cost-efficient. The expense ratio, which represents the cost of managing the ETF, is relatively low compared to actively managed funds. This cost efficiency benefits you, the investor, by minimizing expenses. Finally, ETFs offer flexibility. You can hold them for the long term as part of your portfolio, or engage in short-term trading to capitalize on market movements. This gives you the ability to adjust your investment strategy based on the ever-changing market conditions. By investing in a technology ETF, you've gained exposure to a diversified portfolio of tech stocks, managed costs efficiently, and have the flexibility to adjust your investment strategy based on market conditions.